Good afternoon from the Nasdaq market site in Times Square. I'm Brad Smith here with TK Kerstetter, and you're tuned in to the hashtag Boardroom Trivia series. Through this series, we explore the hot button issues that are affecting today's corporate boardrooms. This month, the topic is shareholder activism with trivia questions forthcoming. So that's where you get to get involved. Simply post a comment with your answer. TK, why don't we just dive right in here?
Yeah, and we first want to apologize to everybody. This was actually scheduled for tomorrow during Stella, the big storm, and we thought if we didn't get it done today, we may not get it done all week. So I hope, let's apologize to our audience and say...
Sincerest apologies.
Yeah. But here it is.
But we're happy we get to it a little bit earlier. We couldn't wait. So, So absolutely. So let's dive right in. What is shareholder activism for some of the viewers out there? Why is this such a hot button issue right now?
Well, shareholder activism is where certain shareholders are aggressive in what the changes that they'd like to see companies make if they're not satisfied with the performance. Right. And there's all kinds of ranges of how to put that pressure on. You know, they may want the company to spin off a piece of its business. Right. They may want to change management. They may want to change the board. There's all kinds of things that might happen. So the reason that it's picked up and why it's we've got more activity is, first of all, coming out of the 2008-2009 crisis, people's portfolios took a nice hit during that time period. Absolutely. And so they want... to make sure that they're performing, they want to get more aggressive. They want companies, they're not willing to wait long periods of time. So that's part of the aggressiveness. The other thing is there's a ton of money. These hedge funds and these activists, the better they do, the more money that flows in. So we're talking about billions, almost trillions of dollars ending up in these hedge funds. So they've got money to, and more power, more muscle, okay, at that point. And then lastly, Dodd-Frank, after the financial crisis, when Dodd-Frank was put in place, it sort of gave shareholders more muscle. And so with that muscle, they aren't afraid to sort of speak up on that. And so we've seen a significant uptick in activist campaigns.
So you mentioned a few major milestones in how the industry has kind of evolved over the previous couple of years. What was the activism scene like prior to that as well? When we think about, you know, the early 2000s or even before that, did we see as much activism? What are the trends right now that you're seeing?
Well, remember in the 80s and 90s, there was things, activists were called barbarians at the gate, you know, and, you know, they made that movie about that, and today PwC did in their last annual boardroom study, they did actually board members today look at positively as activists. It helps them with their strategy. It helps them stay focused. So about 80% of board members didn't have a negative opinion. So probably the biggest change between then and now has been sort of the perception of an activist stealing the company versus improving the company. So that's probably been the biggest change over that period of time.
Absolutely. We see this depicted a lot in movies and a lot of motion pictures sometimes as well. I mean, is it accurate from what you're seeing and what you've experienced?
Well, certainly some of them. I'm thinking of Michael Douglas's movie Wall Street, and Danny DeVito did one where he took over a steel company out in the middle of nowhere, and those things do happen. They don't happen quite at that level, you know, with quite the drama
movie
that you
magic,
need for movie magic, but there are certainly, there are certainly cases we may touch on when we talk about some of this trivia a little bit.
Certainly. So let's dive into the trivia because we've got some really good questions here. So I think we're going to toss them up on the screen for some of our Facebook Live viewers. So the first question that we have for the shareholder activism trivia here today. Again, if you've got answers, feel free to throw them into the comment section. First question, true or false? In 2016, there were 519 activist campaigns against public companies, which was the highest annual count since 2009. Is that true or false, TK?
Well, if you answered true on this, you got the wrong answer. The answer is false. And the only reason that it becomes false is, well, there's two reasons. 2009 was a big year for activist campaigns, but last year was the all-time high. In 2015. We hit 622 campaigns. So 2014 was 519, 2015 was 622, 2016 was 519 again.
Right.
Okay. So, but the important part about this is that all that is big increases. So we're seeing, even though there was a little dip here, we're seeing certainly a rise in shareholder activity, and I think you're going to see the same thing in 2017.
Now, how would some of the viewers, there's obviously some companies that really don't want it to be that public, that there's an activist campaign that's going in the works to undertake their company, really. And so how do we find out this information?
Well, you have to file if you're typically going to go over certain percentage
Sure.
levels, so that tells the market, okay,
Got it.
that somebody's accumulating stock, okay, and that they may do friendly, what's called bear hugs, or things that are public to letting the public know that we're not happy with what's happened.
Right.
So we're expressing to the public that we've sent a letter to management.
Sure.
Or bear hugs a little more than that, saying that we're really interested in making changes or maybe even taking over the company. Now, what's interesting is to show you how some of the passiveness has changed even with institutional investors. CalSTRS, the California State Teachers Retirement Fund, who had always been a passive investor, they're an index fund, whatever. They actually have linked up with a hedge fund, relational investors in the past to go after the company Timken, as they wanted them to spin out their steel business. So all of a sudden you're seeing previously passive investors all of a sudden coming under the category of activists. So it grows, and it's continuing to grow.
Absolutely. Let's dive in with the next trivia question. So we've got, based on shareholder proposals, what was the top reason for activist intervention? We've got A, environmental issues, B, political issues, or C, proxy access.
So if our audience answered C, they're correct.
Okay.
Proxy access is the number one shareholder proposal. And that's followed by political issues, and that's followed by environment. But there's a little bit of a gap. So your next question to me, I'm sure, is why is proxy access number
Naturally.
one? So when we look at this, first of all, right here in New York, the New York retirement pension funds are probably the best known activists for filing shareholder proposals on proxy access. Proxy access means we as shareholders want to have the ability to put candidates up for election, okay? And so if somebody hasn't accepted into their bylaws the proxy access language, then they're going to file a shareholder proposal. For the last 3 years, they filed about 75 a year, okay? Wow. And some of them they have settled, okay? So they've still won a high percentage. So, and some of the companies now are being proactive. Before I get on the New York City pension fund radar, I think we'll go ahead and put that language into our bylaws. So they've had a huge impact of that. So companies, and the interesting thing is they're starting from the top. They're starting in the Fortune 500 and just working, seems like they're just working their way down. And they're starting to get to the bottom of that. So mid-cap, be prepared, because you're probably following not too much later.
Oh, gosh. And so the next question that we have up here with that background that you just provided is now true or false. Activists only target companies with poor operating performance and earnings. True or false?
Well, the answer is false, okay, because they don't just, and that was even more of an issue in the older days, that a poor operating company was usually the red flag that was happening. But today, it doesn't. You don't have to have
anybody.
Yeah, it can be anybody that's doing that. Now, underperforming companies are a bigger target. Okay, so that's a risk that if you're not performing, you're certainly at that. But
especially in an environment where emotions are already running high, and you're going to see some instances where board members at the top and different shareholders are going to be frustrated with the processes and matters at hand, and they're going to look for the first way to remedy them.
And if board members aren't going to take action, then the activists are going to push them. And
100%.
if somebody's stock is down an activist, it's not hard to get the rest of the shareholders behind the activist because everybody's frustrated at that point. So that puts added pressure on. Now, a perfect example of why not just stressed companies have this would be Carl Icahn went after Apple. Okay. Now, Apple has to be considered a pretty good performing company.
Doing all right.
Yeah, all things considered. But they had a cash hoard on their balance sheet that Carl Icahn wanted them to do something with, either make a merger or give it back to the shareholders or do something with that. So he was putting pressure on management and the board to do that. So perfect example of why it doesn't have to be a bad company. Another example might be Nelson Peltz, an infamous activist. He took a big position in GE. He categorized that as a friendly position. Okay.
Friendly, okay.
Friendly. But there's nudges, I'm sure, here and there that what he thinks the company can do to improve its performance. But my understanding is that has been a good relationship.
Absolutely. So what's then, if we kind of take that next step and think about today's boardrooms, how do they then go about, incorporating some of these different trends, having the knowledge of the different trends that are out there, and making sure that they are mitigating risk properly on their side?
Well, we on Inside America's Boardrooms just had an activist on, and he was very insightful about, it was an activist telling you, here's what you need to do and how he targets people. And the first of all, which we had a laugh about, he said, best thing to do is have a great performance. Well, everybody wants that anyway. So, but that's hard to, we're talking about companies that might not have a good performance or that have some activism anyway. Number one is probably having a good shareholder communication program. And that's a big thing. Shareholder engagement is huge today, okay? And that means making sure that you have an ongoing relationship with shareholders so they know why things are happening. If that wave of an activist comes in, often your other shareholders, particularly your large institutional investors, will back you. Okay, so that's important. Board refreshment, okay, meaning we're going to continue to refresh the board. We're going to continue to have directors that understand what's going on. We don't want somebody to be too longly tenured. Those are things that activists go after. Activists look for the soft underbelly if they get into a battle, meaning do you have directors that have served too long? Are there other governance issues that the board has just not addressed or looks like they're falling down in their fiduciary areas? If they see that soft underbelly, going right for it. And they can make a board look pretty foolish sometimes when you're in the heat, even though that's not the issue that they really care about. That's the issue to get change.
And so if they're also kind of going for that kind of jugular, if you will, to incite that and get that change within the organization, what are some of the other resources that they leverage to make sure that they can, absolutely have everything in their court that they need?
With today's world, there's a lot of information out there, but one of the things that I would recommend to somebody that I think is good is Nasdaq actually did a white paper with NACD. It was titled, Learn from Activists, Share Your Story with Shareholders Consistently. It's a nice piece. I'm sure it's available on your site.
Absolutely,
I'm sure it's available on the NACD site. I would recommend it. The other thing I want to do, Brad, which is interesting, we covered a lot of facts about activists today. I want to thank FactSet, who actually rang the bell here.
Nasdaq listed, Phil Snow, their CEO, was here.
And they really have a wealth of information. I want to thank them. They're the ones that I relied on for some of the information. But I would recommend certainly the Nasdaq NACD piece. I would recommend, again, there's a lot of information out there that if any board member is serious about finding this out, it's available.
Definitely. TK, great to have this discussion here today. I know we'll be having an ongoing narrative with the Boardroom Trivia Series, but pleasure to start off with Shareholder Activism, use this as kind of a jumping off point, if you will, for this series.
Thanks, and we're looking forward to the next trivia questions. Hope our audience did well.
Definitely. We hope so too. So thanks for being here, TK. Thank you all for watching live on Facebook. Don't forget to check out the white paper. You can find it in the comments. We'll post it here in this same video so that you can access it, download it, and and get some of the great information that TK leveraged here today and discussed. And great to have you here again on Nasdaq's Facebook page. Stay tuned for more coming from the Nasdaq market site throughout the rest of the day.
Piece of cake.